So a number 2 counter trend entry would look something like this. So as you can see, price was making a downtrend, very, very aggressive downtrend. It made a lower high. You confirm that lower high. So many folks may have seen, well, it didn't do that in this example, but maybe they were watching for the riskier approach, which was the first sign of a trend shift, knowing that this is a 4-hour or higher time frame downtrend. That's a risky approach. So we'll kind of manipulate the example. We'll say that this was the trend shift that occurred prior to taking the week targeted low. So in that case, you would say that, oh, I'm going to enter on the first mitigation back inside this newly formed demand range right here. If this was the newly formed demand range, it would look something like this. Right? You got your break of structure, you're expecting this and this. Whereas even if that happened, it might just go yoink and take out that week low anyway. So that's a more dangerous approach, obviously, to counter trend trading. This is what I call the mid-risk approach, right? So basically, you're waiting for the week low to get taken out. You're waiting for the order flow objective to fulfill itself. And you're waiting for that deviation of the range, essentially. You're waiting for that range low to be engineered in a downtrend, or the range high to be engineered in an uptrend, which all boils down to Wyckoff and a way to look at Wyckoff. Obviously, if you watch the Wyckoff series, you'll see that. But that's what it's derived from, this idea here, right? So essentially what we have here is we have the low, we have the high. Price came back and took out that low, and then you were watching the internal structure on this leg to this leg. Price went down, up, down, up, down, up, down, up, down. And you could even investigate this leg here. Actually, that would have been fine enough. So down, up, down, and then break across. So really, if you went to an even lower time frame, you may have already seen an entry here. So using that second approach, it's basically dissecting the internal structure. So using the internal structure to your side, obviously using this high, breaking that high would have been the better play. But you could have also said to yourself, well, I'm going to go with this guy as well. So I see this breaking bullishly, okay? And then we could have used the demand range here as the entry. Now, if you wanted the safer bet, then quite clearly this would have been the safer bet, using this high, this low, this high, low, high, low, high, low, high, low, and then obviously waiting for that previous lower high to break. And from there, you could have said to yourself, okay, this is my newly formed demand range. This demand range already mitigated this internal or very local internal demand range. So this demand range here, in theory, should be the entry point. Is it okay if price is price allowed to SFP the low of a demand range? It can, especially if there's no order blocks with imbalance remaining within that demand range like we have here. So this very well could happen. And the reason why it could happen is because technically, if you look a little closely here, this has not been mitigated. This little 5-minute order block here has been missed from the first demand range. So in that case, I would actually think that the higher probability play would be to come into there, and you could even wait for yet another confirmation. Do you have to? Not really. Technically you waited for the confirmation, which was the number 2 idea of getting into the trading plan. We waited for the week low to be taken out. We waited for the internal structural shift, and all we're waiting for is to take that low out with the reclaim, or coming into here with some kind of shift, or we can just enter here, putting our stop under that order block down here. If this order block was hit, then the stop has to go under here, right under that low itself, but that's not the case here. So let's see how this progresses. And if we're lucky enough, we're going to develop some more structure to play on here from here down to here. And it looks like we might just get that. Let's go to the 3. We might actually get that. So this would actually not make it a medium risk trade anymore. This would be a higher probability trade if you have the luxury of seeing one more structural shift on your side. So this is what we have so far. So we have 2 more up candles. Great. We got that guy. That's going to come in a little high. I'm not a big fan of that. So technically speaking, unfortunately here, it already broke structure bullishly. So you wouldn't really have been able to get into that POI short. Which is interesting because if memory serves me correctly, I believe that Binance actually has come into that previous demand zone there on the 5-minute time frame. But that's okay. So where would your entry have been? Well, your entry would have been breaking this structural point right here, right? Once you had the close above it, you could have put your entry, you could have put your stop, you could have put your target up towards this initial week high, if not higher, to fill all that inefficient price action to the side. That's where you have to use everything all in one to figure out your actual target. But your primary absolute target would have been this high here, using the second entry criteria, the medium risk entry criteria. The low risk entry would have been the previous example. This is what I call the medium risk entry. The higher risk entry would have been to do something, as I mentioned before, watching structure form and seeing something like this, where you're like, oh, I'm on the low 1 minute time frame here, and I can clearly see that, hey, we have put in that swing low, we put in that swing high on the higher time frames, but then price is coming down and you're getting this, right? You're getting that downwards move. You're waiting for the first sign of a bullish flip, and you get that bullish flip officially right there. And you're, oh, wow, look at this order block down here. It's a great order block. Or look at this little order block right here. Or look at this order block right here. Putting your stop under that low or under the block itself. And then just died off, right? That's a really, really dangerous way of doing this, of playing structure. In fact, especially on the one, like, it's incredibly stupid, really. It's, it's very rare that something like that works out in a counter trend environment. In fact, you had a more convincing one right here, but nonetheless, it still failed. So it looked like yet again, oh, wow, look at that. We even took liquidity this time. For a lot of people who long this, I guarantee it. They've seen this liquidity sweep right here. The week low was never taken out. And then they seen that structure ultimately broke using that more, it would be like a 5-minute internal structure drawing, but using that 5-minute internal structure drawing, price was going down, up, down, up, down, and then eventually breaking up again. And people probably tried to long this zone here, or this internal range demand zone, and ultimately died off, right? Happens all the time. And you could argue that there was no reason to do that because you're in a much, much higher time frame downtrend at the time of this drawing. Like if you went to the 2 hour even, you can clearly tell that this asset is going like this, right? So why on earth are you longing that is the real question. There's no real reason to long that without having the confidence behind the idea, right? So seeing the initial traders, knowing that they could get taken out, or just patiently waiting for the structure shift to present itself. Now, in this example, there's no way that you could have looked at a criteria 1 high probability entry. And the reason why you couldn't is because you have to take this low out to confirm this as a high anyways. So in that regard, if price had came up like that, that's not a 1 entry, right? That doesn't make sense. That's not a 1 entry. You would have to go like this, and which is, you had no choice but to use the 2 entry by taking out that weak low first. However, if structure looked like this, down, up, down, like that, the 1 entry is waiting for this guy to break. Remember? That's the difference between them.